Thank you. Yeah, it's a great pleasure to be here. As Eusebia said, I studied as an engineer, but although I did a master's degree in environmental science and spent 18 years working as an environmental consultant. Only 7 years ago, I joined the financial services sector. And I lived this kind of schizophrenic existence. Amongst my environmental colleagues, I'm seen as a massive sellout, having joined the dark side. And amongst my finance colleagues who I work with every day, I'm seen as a flaming lentil head who has got no place in the finance industry. So it's a good feeling for me to be here amongst kin. I'm going to share with you a little bit about some of the emergent thinking inside of Old Mutual concerning this idea of shared value. As you are probably aware, Old Mutual is coming home. It's starting a new chapter, anchoring ourselves back here in Africa. With this transition back to being an independently listed company in South Africa comes a renewed intention to play a more purposeful role in society. And I guess it's one small step in a very long 173-year journey that this organization has been on in terms of its maturing. And hopefully what I'll share with you today will give you a sense of just how deeply embedded this thinking around shared value is within the way the organization operates. And I think much of my conversations internally with my colleagues is, when I tell them about these ideas, they're like, well, that's actually what we've been doing all along. I just want you to pause and reflect on this idea of what it means to be a 173-year-old organization. You probably are aware that we're about 7 billion odd people on the planet. When James Fairbairn started Old Mutual way back when as a mutual assurance society, there were only 1.2 billion people on the planet. The world has changed a hell of a long time, but what's interesting is the organization has a lot of institutional memory. And one of the curious things about the organization is, as a consequence of what it does, it makes promises to pay people at some point in the future by virtue of policies, funeral plans, whatever it is. What it means is that even if the organization has to shut its doors today, it has promises to pay people 30 years hence. So the organization, I think, is inherently always scanning the horizon, looking at what's coming next. So just to give you a sense, Old Mutual, as a new listed business, that'll happen sometime later this year, what does it represent? We have a footprint across 14 African countries. We have about 1.2 trillion rand of funds under management. We've got about 12 million customers. And we are very active, right across the country. So let me just scan this. So what's interesting, and I think what's quite exciting for me, and it's what I wanted to share with you today, is this idea, embedding this idea of being a responsible business has been central to Old Mutual's journey over certainly the last 10 to 12 years. And a lot of that focus around responsible business has been focused on, being responsible to our customers, making sure the products we sell them are good and right, making sure that we are responsibly deploying our customers' capital, making sure that our staff are, have a good place to work and are well looked after. And we've actually got some good scores on the board there. We've been rated #1 place to work across 13 different countries. This idea of being responsible to the communities that we work in, and making sure that we're responsible in respect of our environmental operating footprint. And this is all good and well, but the reality is when you go and speak to executives, it's like, look, bottom line numbers, let's deliver those, we'll figure this stuff out afterwards. And I think the shift in the conversation is nicely summarized in this idea of the organization's business model. It's shifting this idea of, doing good by doing well as an afterthought to profit making, to actually being central to enabling the profit generation of the business. And I think that's enabled by two very important thoughts. One thought is this idea of shifting from a world of shareholder primacy to stakeholder inclusivity. And I think that's really nicely embedded in the thinking around the King Code, as well as this idea of recognizing that the financial system doesn't exist in isolation, recognizing that externalities matter. So the fact is, the the economy can't exist without a functioning society. Societies can't function without a functioning environment. If there's failure in one of those systems, the whole thing fails. So this kind of connectivity between these various systems is really central to, I think, the emergent thinking we have within the organization. And the important thing is that it starts with customers. We're here to serve our customers. At the end of the day, that's why we exist. And on the one side, we sell products and services, financial products and services to our customers, all 12 million of them. And we have an opportunity at that point to think about things like inclusivity, to think about education, to think about financial wellness. And embedding that into the way we deliver our goods and services is absolutely central. What that results in is people paying premiums across the organization on a monthly basis. We then collect those premiums, put them in a big pot. The actuaries come up with clever formulas to sort of allocate the assets across different asset classes and jurisdictions. And then it ends up in the investment part of the business, which is where I sit. I sit in an environment where we operate with multiple boutiques, all seeking return for our end customers at the end of the day. But the idea of taking all those premiums and redeploying them productively back into the economy in a way that drives low carbon, resource efficient, and socially inclusive growth is really central to actually what we do as an organization. And what I want to do is give you a sense of some of the complexity of what it means to be doing that in an investment, from an investment perspective. We manage in the investment part of the business some 600 odd billion rand of our clients' capital. It's not ours. This is the savings of the average person on the street. And what we got to do is find an appropriate return, but at the same time also be mindful of environmental risk, social risk, governance type issues. That's good, but it's not enough. We also need to seek out opportunities to start solving for some of society's big issues, right? How do we solve for education? How do we solve for affordable housing? Education, healthcare, mobility. These are challenges, and we can't do them on our own. It requires us to reach out and have partnerships with government, municipalities, NGOs, and other thought leaders. So this idea of collecting premiums from our clients on the one side and redeploying them productively back into the economy, what it means is it shifts the dialogue at the business corporate level to being, let's make profit and we'll do this afterwards, to actually, this is central to us being around for another 173 years, and it's central to our ability to deliver on our long-term commitments to both our shareholders and all of our other stakeholders. But I also don't want to sort of leave out another important sort of step in this virtuous circle, which is all the very good work that happens as a consequence of our ability to make profit. And that happens in the space of corporate social investment, and it happens in the space of enterprise development. And a lot of work has been done in respect of this. I want to just pause here and reflect on one of the ideas that was mentioned earlier, is this idea of ecosystems, and looking at our organization from an ecosystem perspective. Where do we touch on various parts of some of the core ecosystems that we collectively as a society need in order to function? And I want to touch on one specific area, and that's the area of education. Historically, the organization has done a hell of a lot in respect of grant funding in terms of our corporate social investment. And we have a flagship education project. We're working with schools. We're doing a hell of a lot of work in that area. And that's good. And we have a lot of after-profit capital that's deployed in that environment. But when you start connecting the dots back to our customers and you think about, well, our 12 million customers, what's their experience in terms of education? How financially literate are they? What is their level of financial wellness? And what can we do about the way we design our products, the way we deliver our products, the way we sell our products? What can we do in that moment to actually up the level of financial literacy and the teaching moment that's presented inside of the way we deliver our goods and services? And it sounds like a noble idea, but actually it has got real business relevance, because when customers stop paying their monthly premiums as a consequence of taking out a loan that they don't need from a loan shark that's charging them an insane interest rate just because they're none the wiser, that has an impact on their life, it has an impact on society, but it also has an impact on our bottom line, So it's well within the scope of the way we need to work to start solving for that financial literacy issue. And then if you circle around across to the responsible investment side of what we do, what's really interesting in that environment is the work we're doing in terms of solving for education in this country. So we have a schools fund that was put together a number of years ago. This is a fund that has a couple of billion rand in it, and it is focused on building schools across the country and making private schools at affordable fee levels. In 2017, there were 24 schools built by that fund, 16,000 learners, over 1,000 staff employed in those schools, the majority of them teachers. And this is a fund that's generating a very decent return, but solving for a material societal issue. And if you look across the education ecosystem and you look at the touch points of our organization, suddenly from an impact perspective, the ability of the organization to meaningfully contribute to education outcomes in the organization become really, really powerful. Obviously, we know we can't solve it on our own, but it's good to see the conversation in the organization shifting to this kind of ecosystem style of thinking. So schools is just one area, and I want to touch on this very last slide now, which looks at this idea of what does a low-carbon, resource-efficient, socially inclusive economy look like in 2030 in sub-Saharan Africa, and how do we get there? And who needs to be putting capital to work in a way that's going to get us there? And so a number of years ago, the organization decided to intentionally start focusing on its areas where it can have a contribution. And to date, so we've developed our own green economy taxonomy. We're tagging all of our investments at the base level and starting to look at our capital deployment and saying, okay, what part of our capital, whether it's debt or equity, is at work in the green economy, and what are the impacts of that? And it's spinning out a really interesting picture. So what we see here is about 116 billion rand of, it's not our capital, it's our clients' capital. That's at work in the real economy, generating a decent return and contributing, we believe, to this low-carbon, resource-efficient, socially inclusive economy. And bringing that sort of lens to the way we think about our investments is really, really, really important. Now, you may well ask the question, well, what about the other 500 billion? Obviously, this is the portion of our capital that's at work in the unlisted environment, because if you look at a lot of the green economy trends or themes that South Africa needs to invest in, when you go to the listed market in South Africa, investing directly in these themes is actually very, very difficult. It's hard to invest in education. You might be able to invest in Cura, but it's difficult. How do you invest in renewable energy in the listed market? How do you invest in affordable housing? There are one or two investments you can make, but actually a lot of the big opportunities that exist both in South Africa and in sub-Saharan Africa really exist in the unlisted environment. However, since we're a pension fund, we can't just go and put all of our money there. We also have to diversify. So that means investing in the listed market. And so what we've been doing in that environment, and I think this circles back to the shared value discussion, is having a much more coherent conversation with the 300-odd listed companies that we invest in on a day-to-day basis. We're starting to have conversations with the CEOs and the executives to say, what is your strategy around long-term value creation? And how does that draw on natural capital, human capital? What are the impacts? How do we get a sense of how your business is contributing to one of the biggest national imperatives around transformation? How do we actually get a sense that the link between your stated strategy and the way you're rewarding your executives is actually, there's a connected story there. And what you'll see is a much clearer voice from our organization, certainly, and certainly across the investment community, in terms of holding executives account around these kinds of issues. Thank you.